Welcome to today's morning report on Wednesday, the 23rd of March, with me, Rich Barry, market analyst at Handtech Markets. European trading sessions got off to a fairly positive start. You tend to see that in the wake of terrorist events, markets tend to have these sort of knee-jerk reactions that unwind, and that seems to be what we've seen in these, certainly the equity markets and also the safe haven trades that initially were doing so well yesterday have completely and utterly unwound their moves, certainly with gold lower, yen lower, and it's very interesting that we've seen that, and we're seeing the equity markets bouncing. Not only that, we're also seeing the US dollar stronger. The US dollar has strengthened in the last few days as we've had a series of Fed members actually coming out sort of talking about the possibility of an April rate hike, interestingly enough, considering the hugely dovish shift that we had in monetary policy from the official Fed statement and also Yellen press conference last Wednesday. We've had a few hawkish members, more hawkish members on the scales, such as Jeffrey Lacker and John Williams, coming out and saying about possibility of an April rate hike. But we're also seeing Charles Evans, who is habitually dovish in terms of his stance on monetary policy, and also Philadelphia Fed President Patrick Harker as well, coming out and giving hawkish updates. So this is helping to drive the dollar higher in the last couple of days. Whether it remains sustainable or not, will be interesting, because there's a fair amount of resistance to a stronger dollar on a lot of these forex charts, and I'll talk you through that as I go through euro dollar, cable, and dollar yen charts. Now, in terms of the updates on economic events today, we have got nothing really in the European session. So we move towards new home sales at 2 o'clock for the US. And now that is forecast to come in slightly higher at 512,000. So it's about a 3% improvement on 494 last month. This number will be watched though, because considering we had a bit of a blip to the downside on the existing home sales, certainly the market would want to see new home sales improving, because new home sales are a big feed through to the economy. So that is at 2 o'clock today, and also we've got the EIA oil inventories report at 2:30, and that's expected to come in at 3.5 million barrels of inventory build. Now, last week we had a surprise, it came in less than expected on the inventory build, and the market certainly boosted off the back of that. And yesterday we had the API oil inventories build, which showed a 3.5 million build on the inventories there. So it'll be interesting to see what comes out today. But certainly the oil price does have a move around on that report at 2:30 today. So that takes me to my chart of the day, which is the sterling yen. Now, I find this chart interesting because we've basically been we've rallied off the lows in February. Low coming in at 54.75, and that was sort of the big support after a huge sell-off in the past few months. But what we're seeing now is a consolidation. I think that consolidation, interestingly enough, underneath that key resistance at 164, old support becomes new resistance, 164. We're now seeing what I think could turn out to be a consolidation into a head and shoulders top pattern. You've got the left-hand shoulder, head, right-hand shoulder. Looking at these momentum indicators, you'd certainly say that that is also on the cards. RSI also paints that similar picture. If you saw the RSI back below 40, could that be the sign that's about to happen? Also, the MACD line is basically just unwound back to a level at which they did in early Feb, in that rally there before the big sell-off. Stochastics have already crossed over and are accelerating lower with a bear kiss. So this is all sort of pointing out towards negative momentum in this consolidation, and it looks like we're going to see possibly a downside break from the move. Now, if the chart ever comes up, here we go. Here's the hourly chart. As I said, we've got this head and shoulders sort of pattern here. We've got the moving averages all falling in bearish sequence. RSI on the hourly failing around that 60 point, going back towards all below 30. That is indicative of negative momentum. and just generally speaking, pretty much negatively configured across the board. Now, what we do have is a bit of resistance, 59.80 towards 160.15 area is your sort of resistance band, being the old low from Monday, and then yesterday's sort of reaction high, 59.80. So I think anything around there is probably going to be a decent selling opportunity, because also that comes in around where the moving averages are. That would be where the MACD lines would be around neutral, and the RSI having unwound to sort of the 50s area again. So I think anything around that, if you sort of jump into that, I think you should use that as a chance to sell, because I think this is playing out as a head and shoulders top pattern. Hasn't completed obviously yet. That completion, I'm taking it as a move below the 159 figure level, and that is a level that was broken initially to the downside yesterday, but slightly held on. And again today, it's sort of coming in as a basis of support again. So 159 figure, I'm taking as your breakdown level. Certainly, if you saw a close below that level, I think that would be your completion of the top pattern. And it would sort of imply 5 yen worth of downside. So you'd say 154 figure. Again, that would be retesting that low. You've got support and minorly support around that 56.15 area from early March, but it certainly looks like this chart is positioning for further weakness. So I wish you good luck in your trading today, and I will speak to you later. Thank you.